Welcome, Arnold. Good to see you. Hopefully, this stream works this time. I think it should at least. Welcome, Dylan, as well. Let's wait a few minutes as usual. Meanwhile, I'm monitoring gold to see what we do. I believe we just had a news event, but it was not very spectacular. BTC is in local demand here. Good afternoon, Zach, as well. Paul's voice. Yeah, this evening it will be Paul's last speech before he will be replaced by someone else. So end of an era. Okay, so let's just get started. Yesterday I had the stream, but yeah, my laptop crashed out or something, so eventually I recorded the video. But so far it's following the plan pretty nicely. Let's delete everything. Where we had this range from last week, range high, range low, and then early in the week we had that push higher, where we took out the liquidity above the range high, and then had basically this sell-off into new lows. However, it changes. It's a bit different per exchange, because on the USDT pair we took out the high, but if we look at the USD pair, or for example on Binance, then we did not take out the high, and instead created equal highs. So let's go. Yeah, this is Binance, for example. And if we look here, let's go to the USD pair. Yeah, right here. You can see that instead of a clean sweep, it are equal highs. So that means liquidity. So yeah, it's a bit of a different case between which exchange to use. Because if we look at the main market structure on this pair, for example, then because you have equal highs, I would personally say this is your bullish structure: higher high, higher low, higher high. And then this is still your bullish count, in which anywhere from here can just be a higher low for a higher high. However, on the USDT pair, on Bybit, but not on Binance, we made a new high here. And in that case, you could count it as this is your higher low, then this is your higher high, and then this is your break structure, where you broke structure back to bearish right here. So a bit of conflicting views depending on which exchange you look at. Because here, if you took it out to the high, then this is your valid higher low. And then you have a clean bearish market structure break right here, in which you then expect a lower high anywhere here for a lower low. So a bit of conflicting ideas, but my main bias was to look for 1, 2, 3, and that is what we also got locally. So yesterday I mentioned that we had like here 15-minute downward structure right here. So low, lower high, lower low, lower high, lower low, lower high, lower low. And that the first sign of strength would be to break this 15-minute structure back to bullish, in which you also reclaim your former range low. And that is what we eventually got. So we had from here, we tested it right there, came in, and then we broke it. So that was the first range reclaim. And then this was the more important hourly structure, in which you can watch this as your downtrend from high to low, low, lower high, lower low, lower high, lower low. And that one broke back to bullish right here. So to me, that is a pretty strong signal. And combining that with the 1, 2, 3, I see basically this move as a deviation until proven otherwise, which would mean that if you deviate one side, often you deviate the high and then the low, or first the low and then the high, that after deviation, you would expect a rotation back to the other side of the range. So as long as we hold the range lows from here, I'm expecting the range highs. That's my main bias for now. I know that everyone is, or at least it feels like everyone is super bearish. I personally can't justify that yet, because we have like a sketchy high, and I still think main structure is bullish. So my main idea from here is that we have this, currently we are chopping in the middle. So we broke it back to bullish right here, and now locally we are seeing weakness again. But we came into this wick supply, which is basically near the range, mid-range. So my main PYs in the range are always the range extremes, which is this demand protecting the range low, where you basically want to see a higher low for a higher high. And then we have the 1, 2, 3, 4, aka the model 1 into model 2, which is one of the cleanest models you can play. So if we see a move into this demand, this is where I'm looking for longs back to the highs. If we come here and do not get like a clean structure break like this, and we fall below this demand, then I think the bears indeed have are on the right side, and then my main attention goes towards shorts all the way down to yeah, at least right here 65k. But we could go way lower. We can go all the way to here. But yeah, main target will then be like 65k. So pretty important what we're gonna do coming days and week. As long as we hold the range low, I'm expecting higher. Into at least this supply. But since we have that sketchy high, I would love to see just a clean sweep of that and then look for distributions and then short it back down. But for now, still remaining bullish until proven otherwise. Now more locally we have, like here you can also see it pretty cleanly, where we have this grind higher. We did not really leave demand behind here, so that's a good reason that this price does not need to come back for this level. But here we had a clean sell to buy. So this is a super clean demand level, which is also your range low. So this is a high probability PY to look for longs. So I have alerts in that zone. And then the next big other PY is the other range extreme. So this is like a perfect range where we have big demand PY protecting the range low, and we have a big supply PY protecting the range high. So yeah, basically all you can do is to just wait for this level to be hit or this level to be hit, and then watch for the structure in there. Look for longs triggers there, and for the opposite short triggers right there. That's the most simple view currently. Let's look at the chat. Welcome Caesar, Slatan, Lise, Abby, and the Rice Baby. Good to see so many people again. Yeah, I think on USD it's $2. Yeah, it's not a good sweep, but it's true. The below demand can act as fake demand. Which demand? I don't think this is fake demand. I see it as true demand. Sorry, Kijos, but good to see you in the stream. Yeah, it was planned at 4, but I forgot that I need to go to the dentist, so that's why it's out earlier. Can you explain fake supply and demands? Oh yeah, sorry. I need to keep an eye on gold in the meantime for potential accumulation. But yeah, fake demand, fake supply. Yeah, it's not really clean, but sometimes, like let's say this is inversed, and you have a 1, 2, 3. So let's say this is a Wyckoff model 1 distribution in the making. And sometimes you can have demand here, just like we currently have, which then is fake demand. But I think I'm not gonna explain it because it won't help anyone to know when it's fake or true. You should just expect that every demand is true demand and every supply is true supply. If you start comparing it to fake supply and fake demand, then you will drive yourself insane. So I would not focus on fake demand or fake supply. Just think that every supply is true supply. Can only be sometimes that if you have a really clean accumulation or a Wyckoff model, like here 1, 2, this potentially 3, that here you have clean supply, and that they use that supply to trap people into getting into shorts here. For example, here people think, oh, this is the lower high for low low. Then they're gonna short it, and then because you have your 1, 2, 3, then it will fee reverse. That is the only way that you have fake supply. But in general, I would not pay attention to fake supply. Just follow your models and your structure. That's all you need. Otherwise, you're gonna drive yourself insane with all kind of reasons and stuff. It's not needed. Okay, so what I'm watching for gold, this is the most interesting chart I'm watching right now. The other ones, yeah, I have to keep in mind later today we have FOMC, so that's the only reason why, or the way I want to trade ahead of FOMC is if I get a clean entry that I can de-risk pretty quickly. So right now we are potentially forming a 3 drive. So 1, 2, potential 3. Then we know that price should not fall below this deviation threshold. So this is where you can look for entries and then de-risk pretty quickly, because we know that the third tab cannot close below the red line. So my main idea is that we broke down, or are in the process of breaking down from this range, where we had that model 1 distribution, then internal distribution right here. And then early in the week here, we broke down very aggressively. So we have a lot of sell-side liquidity below. So price can also just nuke straight down to take all that liquidity. But what price often likes to do is to, after a range, so this is our range, this is likely our breakdown, to retest it and then go down. So I'm kind of anticipating that we're gonna get that most likely a bearish retest for lower inside this supply. But if we technically look at the deviation threshold, yeah, okay, we are right now closing pretty deep below it. So then the most likely outcome is the bearish RIMC, where this was our range. This is the initiation, mitigation, bearish continuation. So right here we are potentially forming a 1, 2, 3, model 1 again. So what I would love to see is maybe local trigger here, then invalidate supply, come back, flip structure, and then you can run a long here and flip it back into a short. And then the highest probability shorts are right here, where we have this local liquidity trail into this imbalance with that supply. So something like this, and then give like weakness right there. Then you can potentially look for longs right here, third tab, invalidation, if you get confirmation, of course. And then main target is the local range high. But I'm pretty sure that if we take the high, that we will also take this liquidity trail. So I will target the main range low, which is this horizontal level. And then there you can look for potential shorts again, the moment you break structure back to bearish. These are like the main trading ideas I would look at locally for gold. But it's just a potential scenario because we are seeing quite some selling pressure. So if bulls don't show up right in this moment and protect the deviation threshold, then it's likely just nuking down. And trend is pretty bearish, so peers are strong right here. So I'm not taking any long till we have some clean structure, which right now is this right here. So horizontal. Like this is on 3 minute, but pretty clean. Low, lower high, lower low, lower high, lower low. So this is just clean structure. And this is also in line with the range low. So the tab 2. So I want to see like a clean break back in there, and then I'm gonna be interested to look for longs, preferably with some structure like this. And then you can look for a long third tab, your invalidation, as always with the model 1, and then run it up. But for now it's definitely counter context because trend is pretty bearish. And as confluence you can always use the volume profile. Yeah, it aligns, the value area low aligns with this supply. So at the very least you want them to hold here, do not close below, then flip this local structure back to bullish. But then you also have the supply right here, where you basically want to get over. This is also your very low. So this can also be just a lower high for a lower low. So yeah, there's no hurry to get into this position, but it's the only one locally I'm very interested in because it can work out. But for now it looks more like just bearish continuation. Great to hear, guys. And thanks for breaking down the range. BTC makes a lot of sense. We are still in the range. Yeah, it's basically the same as here. You can just, as long as your second tab stays within your deviation threshold, then you can lower it down. Just as here, now this is the level. So also here it can just be still a range if we get a buyback here. If we do indeed break down from here, then the lower high for lower low is much more likely. Which then, right now I'm more focused on longs. But let's say we break down here, then I directly switch my mind and think, oh, if we come back for this value area low or the POC and then break structure back to bearish, then I can also look for shorts. So yeah, if the long idea gets invalidated, then we just can look for shorts again. And that's why, in my opinion, just be fluid and follow the rules is for me mentally helps like crazy. Which also what welcome Matt, by the way. Good to see you. Rise baby, I love how you keep everything simple. I feel like my head is not scattered with how you go through the charts. Yes, that's great. Good. I think it's most important to have, yeah, like just the same stuff over and over again, purely to keep indeed your mind. Otherwise, you can, yeah, your mind will go crazy with everything that can be in play. Let's see. Did you short BTC in that 1 hour supply? No. Was there a 3 drive? Yeah. Was kind of a tree drive, but not super clean, and also weird time to put in a high. So I was personally not really looking at it. But could have been it was clean supply indeed. So could was valid to take. I just did not look at it. We're now coming back for that range low, so that's a very important level. And with the local structure. So that's nice, because then you can watch the moment this flips back. Let's say this goes down here into the mint, and then flips back to bullish. That's like the best what you can have. Welcome everyone that's joining. Yeah, so let me quickly explain the ETH long from earlier. And also what my view on ETH is. Because on ETH we still have like different possibilities what can play out. We have at 1, 2, 3 potential model 1 distribution, where this can be the lower high and this can be the second lower high. So bears, they want to continue this local bearish trend. So low, lower high, lower low, lower high, lower low, lower high, lower low. So they will. This is like the invalidation level for the bears. And bulls technically want to get that bounce anywhere from here above this supply, and then they're out of the woods. So ETH is very interesting with levels on both sides. And more locally, yesterday we had this range, low to high. And then this is tab 2, very local. Like I made 3 tabs, but technically this is just 1 tab because they're so close to each other. So I will delete that one. And then you have 1, 2, and then price broke above. So what you can do here is to go to your deviation threshold and see, is this a potential deviation or is this a break above? Because basically what we always look, also here, this is deviation because it stayed within the deviation threshold. So you have tab 1, and this is tab 2, and it stayed within the deviation threshold, which was here, and then it came back in the range. So then it's a valid tab 2. If we did this, came down and pushed higher, then this was a valid tab 3. If instead the tab 3 breaks much lower, then you look for a lower high for a lower low. So looking at, just ignoring everything else and just looking at this, to me this is a range. This is the breakout above the deviation threshold, which is here. So this can be a bullish RIMC until proven otherwise. That's how I'm locally viewing it. So then we can do the same as always. Let me clean this up. Is to look for the, now it's a range, but this is why ranges and market structure always go in line. Because if we look at structure here, for example, in the 1 hour, then what is our downward structure right here? Basically low, lower high, but this is the fake move. So let's just use that one. Lower low, lower high, SFP, swing failure of your low, which means you get the rotation back to your high. And then here we broke structure back to bullish. So locally, right here, bullish boss. Based on that, you expect low, lower high, SFP, break, higher low, higher high, which is basically the same as that bullish RIMC. So I am looking for longs here And then for a move into this supply, and this is where, like this is an inflection point, where either bears protect their bearish structure and push price down, or if they fail to do that, then bears are fucked and bulls are in full control. So a pretty interesting level right here. And then what you can always do with a bullish range is to watch what is the most important level here. So we know this is a clean demand, and then we have lower demand right here. And then if that aligns with your volume profile, which you draw from the start of your range till the breakout level, so this is the breakout candle, then you have to put it on not extend. And then we can see that the point of control, that is your highest probability reversal level. And that aligns with this lower demand zone. So it's like a nice hourly demand, which is your last sell to buy. So if this is indeed a bullish RIMC, then you want to see price move here with some structure. Right now it's pretty aggressive. Tap into that level right there. Maybe even give like a 3 drive or anything that's A plus. And then if you break structure back to bullish, that's your long trigger. So pretty clean level here to look at. But why we also need to be a bit careful is that this can already be the lower high as well. And we broke that internal back to bearish. So we had higher low, higher high. And that one broke back to bearish right here. So that's a sign to be cautious at least and wait for your clean triggers right here. Because we know that ETH likes to give like a bit more aggressive moves. So into proof and otherwise, I still think that this is a range initiation, mitigation, continuation. But yeah, without confirmations, you have to be super careful. And there's also, let's see, currently, oh, it's now New York Open. So that's pretty important hour. And we tapped into this main range demand. We did more refined demand lower. And we have some structure to work with. So you have low, low, lower high, lower low, lower high, lower low. So currently this is our internal bearish structure. And then flipping that back to bullish can already be like a sign that you have your local structure in favor of your main idea. So my main idea is to look for a higher low for a higher high. However, to be more safe, you want your local structure to be in line with that as well. So now the local structure is bearish. So always when I want to look for an entry trigger, I want to see this local structure flip in the direction of my main idea or in my bias. So that means I want to long, but then I want this local structure to flip back to long as well, which can happen by making new lows. Can, for example, do this. And if you make new lows, then your market structure level also changes. So do this, for example. We have 1, 2, 3 into this refined demand, then break that structure back to bullish, and then that's a clean long for me towards this supply. So oh, for now it's there. So that's important to watch. I'm not sure if we will just observe, see what happens. BTC is also breaking like this internal back to bullish, so that's bearish. So that's a sign to be careful. But this is where like structure in a range, I always watch structure at the extreme. So for example, here to validate the third tab, that's where I pay close attention to the structure to flip back to bullish, like this. But if you are, for example, in your mid-range right here, then you will often see that your structure flips from bullish back to bearish, back to bullish. And if you then only play your market structure, then you get wrecked. So in a range, you don't often have clean structure. So then it's not weird to see structure flips. So then it's also better to zoom out and pay attention to like the higher time frame structures. And not look at every 5-minute break or something, because in a range, it's very usual to get those breaks constantly. BT is now in the key demand, so it needs to hold here. But it's pretty aggressive, pretty vertical move. And I always want to see slow price action. So this is not exactly what I want. So either it buys back here, or it just consolidates and then gives like a range and then long it from there. This to me is a bit too aggressive for now. Yeah, so like gold, it's like you can always make a pre-plan, but now it looks more, or it needs to buy back real quick. But this looks more like it's just very fucking weak. And that the lower it goes here, the more likely it is that you get lower high, lower low. So then we can flip the script and watch what is the volume profile here. Then we have value area low with supply here. And now I would say I'm not really interested in the long idea anymore. But if we get a move up and then break it back to bearish, then I would look for shorts lower. BTC tapped into the demand. This is where buyers need to step in. And ETH tapped into the high probability reversal level right here. Okay, so let's just observe it. Daniel is asking, can you explain more of deviation threshold? Want to know where is the area and invalidation of it? So basically, you can always draw a range. So I'm gonna show it here, so I can also keep an eye on ETH. Yeah. So let's say you have range, you come from high to low, mid-range. Then we know we have tab 1 at the low, at the high, tab 1 at the low. And if you tap your mid-range, then it's valid to look at it from a range perspective. And then your deviation threshold, the red line below and red line above, is the fib 1.25 and the 0.25. So, and that is basically your deviation threshold, which means that every move within your range, so here you go, and as long as it stays within the deviation threshold and comes back, it can be seen as a valid deviation. So not a break, but a deviation. And then you expect a rotation to the other side again. Then you can extend it to that new level. And then if you go for the lows, for example, go to the low, but you come back in the range and do not break below. And also here you stay within your deviation threshold, in which that is a valid tab 2. So then you have tab, let's show it here. Tab 1 at the high, tab 1 at the low, tab 2 at the high, tab 2 at the low. And then you want to look for your tab 3. So we know we have 1, 2, and this is your either your higher low for the model 2, or you make a new low for the model 1. As long as that new drive also stays within your deviation threshold, it can be seen as a valid 1, 2, 3, and then back up. If here we have tab 1, tab 2, and now the deviation threshold is right here. And then price, instead of a deviation, closes above. That means that this is not cannot be seen as a deviation anymore. But then it's more likely that you have a range, breakout, retest, continuation. So that deviation threshold basically shows you when is it valid to look for rotations back to the other side of your range, and when is it a clean breakout. As long as it stays within the red levels, it can be seen as just a range with rotations to the other side. And the moment you break out of it, then you look for a retest, continuation. So basically that. It's yeah, not much else. DD, I use 0.25 etc. for low time frame. DL and for high time frame to outplus 0.3. No, I know where you got it from, but I don't know. To me, this is how it should be used. People like to make it more complicated and stuff so that it seems like they found it out themselves, but that's not the case. I use it 2.5 for everything. Yeah, like gold is now confirmed breaking lower. So now I'm not looking at it from an accumulation perspective anymore, but rather for shorts if price comes back up. So if we get a spike up here, then I'm more interested in continuation shorts than in longs. But this is not one of my cleaner setups. So the only way I would trade this is if we get a local 3 drive into that range low, and then I will scalp that 3 drive and then lower. Otherwise, I just want to wait for my Wyckoff models and stuff. But yeah, gold selling off pretty hard. I'm curious what oil. Yeah, oil is pushing higher. It seems that oil is finally coming back for that massive gap fill into this supply. Yeah, USDT, covering that. We have this 1, 2. So this is potentially a model 2 accumulation, or can still be a model 1 accumulation. For me, the confirmation for this model 2, in which this is your tab 2, is if we break the highest time frame internal downtrend back to bullish, which is for me this one. Then we have 1, 2 candles going higher on the 6 hour, lower high, lower low. So for me, breaking above that confirms that this is the Wyckoff model 2 and that we expect range highs to be next. However, what did price do? Look, here we have 2 candles, so on the 6 hour it's valid, but on the 8 hour we don't have it. So that's why I want to see 6 hour break above this level. But yesterday, instead of a break, we swing filled it. So for me, it's not confirmed yet. And now we are flip-flopping quite a bit here. Because if we look at the 4 hour, then we can again watch what is your structure from the low up. Basically here, high, higher low, higher high, 2 candles going down on the 4 hour, higher low, higher high. So that's your internal uptrend, which if you are bullish, you don't want to lose that, because breaking your upward structure is a sign of weakness. So that we broke, or at least here if we are very strict, here we swing filled it, but afterwards this is like the staircase, and then here we broke it. So technically we broke it back to bearish, but right now price is pushing higher again. So it is flip-flopping around quite a bit. Currently in this supply. But now I would say this is our new main bullish structure. So breaking above that, and the model 2 is confirmed. And then the main target is the range high. So then you have a lot of upside. So put an alert there in case we get there. Now I'm gonna delete this. But for now it can still also go down. So today will be important to see if we get it close above or not. And here, because we have a bearish break technically, this can still be a lower high for lower low and then come back for this demand. So a lot of potential outcomes. This is an aggressive sell-off. So for now, I'm not really interested in the long. Same as BTC, pretty aggressive. But technically, the idea remains valid. So what can happen is that, like normally, I want to see structure like this, and then break that, and then I'm aggressive. Right now, it's an aggressive sell-off. So more often than not, after that, price starts to range here. And then I would watch, do we get maybe here a structure confirmation? But to me, this screams patience. So I'm waiting for that. ES distributed this morning. Could be the tab 3 of a mid-time frame distribution. Let's see. I don't look at it anymore, to be honest. It's kind of a distribution here. Yeah, to me, I don't know. I don't know how it still trades, but to me this chart is just like it's not a realistic chart. So to me, this looks like a normal chart, and the ES is just like the biggest bubble I've ever seen. So I have no idea how it trades, but like very locally it still trades clean, I believe, but I don't pay attention to it anymore. But yeah, this selling off is not a good sign, especially not with oil pushing higher and gold selling off. So risk assets, yeah, they're selling off ahead of the FOMC. Okay, let me quickly explain my long earlier, which was basically we had this 1, the 2, and then we had this aggressive break. So here I knew my main bias is bullish. And then like your higher probability reversal levels is like range high retest and then this demand we are currently in. But if you have a bullish bias and you draw your range, and then you get accumulation models which are in line with like your main idea, then you can already trade them. That's basically what I did on ETH, which was at that moment we had high and low. So tab 1, tab 1. Then here you tap your mid-range. So this is a valid way to start looking at your range. And then we had 2, So after the tab 2, and you get acceptors back in your range, you know, okay, we have the two-tab model so that we can look for potential accumulations, which is either in model 2 or model 1. And then what made me most interesting in it is that we had tab 2. So then you know, okay, I want to see either a model 2 or a model 1. But here we had like local structure down, 1, lower high, lower low, and then broke that back to bullish. So here, after your tab 2, you gotta move up. And then if that flips back to bullish, that's a valid tab 3. So right here, you broke structure back to bullish. And locally you can see here that 1, 2, 3. 3 drive. And that shows absorption. So here you have structure breaking back to bullish internally. The moment you break that back to bullish is technically your entry. Stop loss, this third tab, and then target your range high. Just a very clean model 2 accumulation. And I entered somewhere around here. My RR was a bit higher. But technically you can enter after your third tab has been confirmed. And then this was super clean example of just a Wyckoff model 2 taking out the range high, your technical target. And then from there it sold off. So that's why you always take at least a very big part out at your technical target. Because if you hold this expecting much higher, then you round trip it, and it's not what you want. So that was the clean trade. And on BTC, I took also the VWAP long, which was basically here. So VWAP was bullish, which shows you daily bias is mostly bullish. And then we held the VWAP very nicely. So my bias was to look for longs, also because we had an Asia low and a bet high. So here I was looking at what is price doing locally. And then here I sell the same basically as on ETH. 1, 2, 3, aka absorption at the VWAP. So that's always a level what you want to pay attention to. Because here you basically test it, bounce from it. And then here you also test it and bounce from it. Oké, ik heb dit op het web gevonden. And this is not a clean Wyckoff model or anything, but mostly just like local structure, low, lower high, lower low, lower high, lower low, break. And that was basically my entry. Scalp, trade, stop, low. And then I cashed it out on the push. But these are like not high probability models. It's more like scalping, which worked very nice. But I would not advise to take these kind of trades if you are starting out. Then I would focus on the one I took on ETH, for example. That's just a super clean Wyckoff entry with your 1, your 2, and your 3. And those are enough to basically focus on. ETH bouncing from the high probability reversal zone. So now that changes a bit to the picture that you do not want to lose this low anymore. Because that would mean that this demand failed and that you are in your point of control. So now you want to look for strength. Market structure level is still this high, this red line. But if that flips back to bullish, then I'm pretty sure that it will go higher and that this was too low. So you can watch for import structure right here or some strength. DC is then also bouncing where it had to. Yeah. So that looks pretty good. But yeah, as said, if I watch this price action, then I would not be surprised to see this push higher and then consolidate here. Maybe even into FOMC and then get that move higher or lower if we get bad news. But yeah, on days like this, where you have FOMC incoming, a lot of people want to be positioned already, but oftentimes the market knows that. So they start the chop and then people put their stops right here and right here. So that only adds liquidity to your chart. And then the market loves to take that liquidity. So personally, I always only go into fresh trades a few hours ahead of FOMC. If you have a super clean model where you are protected by a Wyckoff tab. So in this case, this is your Wyckoff tab. If you are protected by Wyckoff tab, then it's safe to get an entry. Or you need to get an entry where you can de-risk quickly. Otherwise, yeah, you are likely part of the liquidity. And then, yeah, good chances that you get wiped out. So let's see what E does if it wants to bounce from this high probability PY. BTC, if it holds, gives some structure, then I want to look for new longs into the highs. See if this local supply can push price down. If this breaks this low again, then I'm pretty sure that we have this demand. I still think high time frame it makes more sense for a model 1. That's why I'm also thinking like we have big imbalances below, liquidity below. If this goes for model 1, much cleaner. But yeah, we just have to follow what price action does. If it breaks above, then the model 2 is confirmed. And then shorts are the play. For now, it can be both. Gold, yeah, confirmed breakdown. So that's it. Let's quickly chat. Welcome, Shido. Yeah, maybe because you did not know I was earlier, but we are still here. Good to see. Okay, so let me know if you have any questions because I have to go in 10 minutes. Then I want to quickly look at the other pairs. We have something on. No, so as hype is playing out exactly as predicted, but not giving me any entries so far. But the idea is that this was step 1, this was the clean deviation above, this was step 3, and the target is now at least this demand, but technically the range low should be next. So main bias on hype is to look for shorts, but yeah, need triggers for that, and preferably also a bit higher. So as usual, if you get like supply is always a PY for me. So if you get a 3 drive into supply and then a break of structure, then you can short it from here. But higher probability levels are to look for that same one in this supply. That's a cleaner PY. So basically looking for weakness into one of these supply PYs on high. If we first push higher. So either here or go for that level right here, and then show weakness and then short. If we first go down lower, then I'm getting less interested in it. So if we, for example, already take out all this liquidity, then I switch more back to look for longs around here. So preferably we first go up, then I can short it back down and then look for longs again down here. But if we already come down, then yeah, it's too late to short for me personally. So just watching how we react if we come into those levels for shorts. So let's buy some hype, and then Tao has been strong. Still a lot of liquidity below it, but it's just having a bullish structure right here. Took, and then yesterday we broke above the value area, which is this value. And then you see that you get a very quick move into the upper part because there's no volume here. So until proven otherwise, this can also just be a retest before higher, which is basically your market structure continuation, higher low, higher high, and also a successful retest of your value area until proven otherwise. So here, and then higher low, higher high, still most likely, and especially as long as you don't take out your high. But yeah, mostly interested in the reactions from ETH and BTC, and potentially the shorts on gold now if we get a backtest. Gonna delete that. This is now the lost local range low. So this is lower high for lower low. Most likely until proven otherwise. It's lagging again. Yeah, maybe I should keep the tabs closed. But yeah, for now, I hope the lag is not too bad. But these are basically my plans. So ETH needs to hold this local demand, otherwise yeah, it looks more like a very ugly range deviation and then back down. But ETH often does that. For BTC, yeah, the range low here is important to hold. If it breaks down, then main priority switches to shorts. But I will not be surprised if we see a lot of chop into FOMC. So looking out for that. And then, yeah, as said, we have FOMC, so keep in mind that if you enter new positions, it can be very, very choppy into FOMC, where then often you get spikes all around. So if you take a position, use a clean stop loss and not just a local low like here, for example, because you want a better entry or like a better RR. Because using a stop like this ahead of FOMC or like a stop here, then you're just asking to be used as liquidity. You either need like super clean levels, stop loss there, or yeah, or above there, but this is potentially Wyckoff tab, so that should be protected. This one is not protected. So that's it. Hopefully, yeah, I have to go to the tent, so I cannot watch it. But for the time being, I don't think I'm gonna take a new trade. I had some nice longs this morning, so I'm now gonna just wait for FOMC, and then I think we have it at 8. So maybe that after that something comes. But yeah, I also have a coaching call, so I won't be around till after FOMC. But then I will give a new update. What's my view? Then for now I have to go and wish everyone, especially safe trading with FOMC ahead, and wait for the clean triggers as always. And then see you guys in the Discord and tomorrow again. So thanks everyone, and oh, and don't forget to enjoy the last presence of Powell. Granddaddy is gonna leave us after today, so maybe he wants to end it with a surprise or anything. Thanks, guys. See you soon.